Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business here with the News Driven Hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek on Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek on Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. A lot to talk about today at the latest big business conference in Beverly Hills, the B. Riley Investor Conference at the Beverly Hilton. We'll be getting an update on that in just a few moments. Stocks ending the day with a pullback, with both the NASDAQ and the S&P 500 coming off record highs. This after the notes from the Fed's last big meeting showed that various Fed officials were willing to hike rates if deemed necessary. The Dow coming in for a closing loss today of 202 points at 39,671. The S&P 500 down 14, and the NASDAQ down 31 points. The Fed officials showed a willingness to raise interest rates again if inflation doesn't cool off more, according to the notes from their last big meeting. According to the minutes, various participants mentioned a willingness to tighten policy further should risks to inflation materialize in a way that such an action became appropriate in Fed speak. The Fed released a summary of their last meeting. At that meeting, the Fed voted to keep the benchmark interest rate steady right where it's been since last July. After the closing bell, the so-called Magnificent One, part of the Magnificent Seven tech stocks, NVIDIA, taking the spotlight on news. Its earnings news, NVIDIA fulfilling the world's high expectations with its April quarter results coming in better than expected. NVIDIA stock had closed down about $4 at $9.49 and change, and has popped nearly $60 higher in after-hours trading, moving above $1,000 for the first time at $1,007.43 here at last check, up 6%. Meanwhile, artificial intelligence, not only a big topic of discussion for Wall Street, but on Main Street too, especially in Hollywood, with actress Scarlett Johansson saying she was shocked and angered over OpenAI's use of a voice that was very similar to hers, and her lawyers got involved, arguing AI voices should not deliberately mimic a celebrity's distinctive voice. I'll discuss this big issue and the latest AI impact in Hollywood with J.D. Harriman, partner at the Foundation Law Group. Also on the tax front, we're watching what's happening there. It looks like they're cooking up new tax ideas in Washington, including a new carbon tax. Congressional Democrats reported to be pushing several carbon tax bills, and most recently, nearly every House Democrat indicated support for a carbon tax. I'll discuss that and more on the tax front with taxpayer advocate Grover Norquist, president of Americans for Tax Reform, later this hour. But first, on your money, the markets and the economy and the whole works this afternoon. Joining us live now, Andy Moore, the CEO of B. Riley Securities, based here in Los Angeles, coming to us live from Beverly Hills at the 24th Annual Institutional Investor Conference. Andy Moore, welcome. Thank you so much for taking the call here this afternoon.
Certainly, Frank. Good to be with you.
Wonderful to have you with us here. Take it from the top. Tell us about the conference and what's the big buzz there at the conference this year.
Sure. This is, as you mentioned, this is our 24th edition of it here at the Beverly Hills Hilton. We have roughly 1,000 people to descend on the site. We have 200 public companies, another 20 private companies here, servicing a group of institutional investors and private equity community as well. So this is 2 days straight of chock-full meetings, one-on-ones, presentations, and panels both. And then tonight is our flagship philanthropic event with Sugar Ray Leonard, where we raise roughly, or historically, we've raised about $5 million towards researching juvenile type 1 and type 2 diabetes. So it's an epic event. The weather couldn't be better, and there's a lot of business taking place.
That's fantastic. I want to talk more about the philanthropic part of that in just a moment. But as far as the big topic of discussion, certainly with NVIDIA earnings out this afternoon and AI, a big part of any conference nowadays, what's the buzz on the AI front?
Yeah, I think when NVIDIA puts up a print like that and stock is, knocking on the door of $1,000, and maybe it's faded a touch since then, but it gives everybody a tailwind heading into day 2 of the event. AI, obviously a topic, and we've had 2 panels central to that, one on the healthcare side and one on the tech, and I think this continues to be a driver of investment, and that is a residual question across every presentation, I think, is how are you implementing AI? How are you seeing the positive benefits of it? And it's an active part of the dialogue, no question.
And certainly over the quarter of a century you've held this conference, tech has evolved to this point now with AI at the forefront, but certainly you've seen the rise of Silicon Beach. Now, of course, the entire L.A. area is a tech community, and pretty much every company is a tech company nowadays. Tell us about your thoughts about how tech has evolved and what's happening here in the Los Angeles area.
Yeah, it's an interesting question. No question, you're seeing a lot of VC communities start to emerge. I'm sitting across the table right now from the gentleman that runs our VC portfolio. So when you mentioned that, it resonates acutely. But the West Coast, I think, continues to be a bastion of opportunity across tech, and you're seeing the concentration of the smartest minds in the business in this area, and we've got a lot of them on site here. So we had historically been a TMT, tech, media, telecom firm. There's a little bit of industrial here as well, but tech is the overriding theme throughout the conference. So you touched on the AI, and again, AI tech kind of go hand in hand, obviously now.
All right, and a lot of talk about M&A activity as well, and I know you're keeping an eye on that and discussions about mergers and acquisitions there too. What's happening on the M&A front this year?
Yeah, so the last couple of years, I'm sure you're aware, it's been light on the M&A front, but we're seeing the pipeline start to dislodge. Obviously, rate stability helps, and whether or not we see two cuts to end the year or rates stay steady in this range, it feels like there's a lot of powder on the sideline, and there's an appetite from the sponsor community to start shoring up assets and monetizing some of these portfolio companies that have been sitting on for a while. So it certainly feels to me like the pace of M&A is on the uptrend, no question about it.
All right, last year at this time, we were talking about those three big bank failures tied partly to crypto as well as commercial real estate. Looks like that has simmered down, but commercial real estate remains a concern. What about crypto and commercial real estate there?
Yeah, commercial real estate, I think that we're going to see that play out over a much longer cycle. Obviously, it did have an impact on SVB and First Republic, no question. And I think that probably persists, but it feels like those dislocations have largely adjusted in the system, and we've gotten to a point where yes, we'll face some challenges over the years, but I think it's going to extend out as some of these commercial leases come up. On the crypto front, I do think this is a currency that will last. I mean, you're clearly seeing some wider institutional adoption, and to the degree that that's taking place, I think it advances the currency or the asset as a currency and means of exchange, and you draw that out and you see really positive benefits. And obviously, you've seen that reflected in Bitcoin pricing as well as the other digital assets.
Right, Bitcoin back around 70,000 this week, near its all-time high. We're keeping an eye on Bitcoin as well as the other cryptos here now. So it's been interesting how that has evolved over the last 10 or so years, and that's become a hot topic there too at these investor conferences, right?
It has, and it's not just the miners directly; it's the equipment providers. So whether it's GPU or infrastructure, significant presence here. So and we've been at the forefront of that trend, raising capital for a number of these competitors in that space.
That's great. And zooming out to the bigger picture, what's the gut feeling about this economy? Is it going to be a soft landing, hard landing, no landing, or what's the thought on the overall economy at this point, and where interest rates go from here and so forth?
Yeah, that's a $64,000 question. It sure feels to me like the Fed has allowed us to or navigated this delicate soft landing. It feels like we are through it. It's not to say that emphatically we are. Interest rate cycle implications for cuts later in the year obviously would be positive. I don't know that I necessarily see that in the cards. And again, if they hold rates in this 5 to 5.25% target rate for some duration, I think that's positive for us. It's the volatility in rates that I think are a little bit business impairing. So to the degree that we get stability, I think you're going to see more business transacting.
Your market strategist, Art Hogan and Paul Dietrich, keep us well informed as frequent guests on this program. What's the buzz there at the conference here about where this market goes from here and where this overall economy goes from here?
I mean, just my last comments. I feel like the economy we're in a sweet spot. Obviously the presidential elections around the corner will have some bearing on that, but I think most people here and the read of the room is very encouraged at the opportunity ahead of us. So you probably get a little bit less of that from Paul Dietrich, a little bit more of that from Art Hogan as they've been historically. But two great minds that you're calling on.
That's wonderful, and you've gotten some inspirational words today from Ricky Watters, the great 49ers player who won in the Super Bowl years ago. So you're getting some good motivational speeches there too.
No question about it on perseverance. He's I would recommend everybody, if you haven't seen him, pull him up on YouTube. He's an excellent speaker. So he's an inspiration, as you pointed out.
All right, and tonight's the big night there. You got a very important charity event, the Big Fighters Big Cause event, with none other than Sugar Ray Leonard appearing there. Tell us some more about that and your philanthropic work here in the Los Angeles area.
Sure. Yeah, that is. I think this is our 14th iteration of this. We've been out on the Santa Monica Pier. We've been at the Lowe's Den in Hollywood, and this is our, I believe, 5th year at the Beverly Hilton. We'll aggregate a crowd of roughly 1,500 people tonight in support of Ray. Obviously, he's a pillar in the community. He's active. Juvenile diabetes, type 1 and type 2, are kind of near and dear to his heart, and so to the degree that we can be helpful and instructive, we try to be. As I mentioned at the outset, we've raised $5 million in collaboration with him. He's obviously a pillar in the community and much respected presence, no question. So this is very near and dear to his heart, and he's been a longstanding partner of ours. So we're happy to work alongside him.
That's fantastic, and no one could ever forget when he was in that fight with Roberto Duran, and Roberto Duran ended the fight by saying "No mas." Nobody ever will ever forget that, right?
That's right. And as part of the event tonight, so we have 5 bouts scheduled this evening. And whether they run full 7 rounds or a round, we'll see. But it should be a pretty nice event. I don't know that we see a no mas. I don't know that we see anything that compares with a Ray Duran, but it's pretty exciting nevertheless. All taking place in the ballroom here at the Beverly Hilton.
Fantastic. I have a feeling somebody might say no mas. We'll stay tuned for updates on that. Andy Moore, the CEO of B. Riley Securities, based right here in Los Angeles. Great to connect with you, Andy. Thank you very much for joining us live here this afternoon on Mottek on Money on 790 KBC.
Appreciate it. It's a privilege, Frank. Thank you, sir.
Thank you very much. And right out to the freeways now on 790 KBC. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby ready to dive into your case. My friend Clark, the Shark, is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek on Money continues here in 790 KBC. Good afternoon. A pullback for stocks today with the Dow down 202 points, settling at 39,671. The S&P 500 pulling back from its all-time high, down 14 at 5307. And the NASDAQ slipping from its record high, down 31 points to 16,801. The yield in the 10-year note now at 4.43%. Cryptos moving around. Bitcoin down about 500 to 69,079. Ethereum down 10 at 3,737. Doge now at 17 cents. Gold pulling back from its recent high above 2,400, down about $10 now at $2,383 and change. Oil pulling back 45 cents at $77.12 a barrel. After the closing bell, NVIDIA, the so-called Magnificent One, part of the Magnificent Seven tech stocks. NVIDIA taking the spotlight this afternoon on its earnings news. NVIDIA fulfilling the world's high expectations with its quarterly earnings news. The hurdle was high, given that many now consider it the most important stock in the world. The next industrial revolution has begun, said the company's CEO in the earnings release. He said companies and countries are partnering with NVIDIA now to shift the trillion-dollar traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity. You guessed it, artificial intelligence. Sales jumped 262% in the first fiscal quarter to $26 billion, an 18% gain from the previous quarter. All of this easily beating Wall Street analysts' expectations, and NVIDIA stock, which had closed down about $4 to $9.49 and change, has popped about $60 higher, above $1,000 for the first time at $1,743 at last check, up 6%. NVIDIA chips are now the undisputed essential for AI platforms. The company's sales to cloud computing data centers rose more than fivefold to $22.6 billion, or some 87% of NVIDIA's total revenue. We'll talk artificial intelligence. It's not only a big topic on Wall Street, but on Main Street, too, especially in Hollywood. I'll be discussing the very latest on that with J.D. Harriman, a partner at Foundation Law Group, who will be joining me live later this hour. Checking other tech names here, we see Apple down $1.45 today to $190 and change. Microsoft up $1.48 at $430.52. Tesla shares pulling back 6 at $180 and change. Netflix down 10 at $640.47. Watching what's happening in the Middle East closely, of course, and we're seeing oil futures finishing lower today, down for the third day in a row following the death of Iran's president over the weekend in a helicopter crash. It's been a nervous week. Latest news from oil supplies, U.S. data showing a rise in crude oil inventories, amplifying concerns over the outlook for oil demand. So oil under pressure this week, despite what's happening in the Middle East. Oil down $1.09 in New York to $77.57 a barrel. Brent crude in London, the global benchmark, pulling back nearly $1 to $81.90 a barrel. We'll be talking taxes shortly as they cook up new tax ideas in Washington, including a new carbon tax. Have you heard about this? Congressional Democrats reported to be pushing several carbon tax bills, and most recently, nearly every House Democrat indicated support for a carbon tax. I'll be joined live shortly by taxpayer advocate Grover Norquist, the president of Americans for Tax Reform, our tax watchdog there in Washington. We have some breaking news here now. Shares of Live Nation Entertainment sinking in after-hours trading following reports that the U.S. Justice Department is set to sue the company over antitrust violations and will seek its breakup. This according to Bloomberg News, citing sources familiar with the case. The Department of Justice and a group of states will file a lawsuit over Ticketmaster's dominance of the concert ticket industry. Among the proposed remedies, according to Bloomberg, is a breakup of Live Nation Ticketmaster, which merged in 2010. The Wall Street Journal last month reported an antitrust lawsuit was in the works, and out comes this report. Live Nation not immediately responding to a request for comment. Shares down about 8% now in after-hours trading following that report. Market Watch notes the Justice Department has been investigating Live Nation for anti-competitive practices since 2022, as the Journal previously reported, with the investigation gaining traction following the meltdown of Ticketmaster's website due to heavy demand for Taylor Swift's Eras tour in late 2022. Live Nation has profited from the surge in concert demand since the pandemic and has defended its business practices. The Biden administration making antitrust enforcement a component of its economic policy, including cases against Google's parent company Alphabet, Google, and Amazon and Apple. Now the latest news for you here on 790 KABC. Good afternoon. Mottek on Money continues here in 790 KABC. New tax ideas in Washington. Yep, higher taxes, of course, including a new carbon tax. Congressional Democrats reported to be pushing several carbon tax bills now. Most recently, nearly every House Democrat indicated support for a carbon tax. Let's bring in our leading taxpayer advocate, Grover Norquist, right there in Washington, president of Americans for Tax Reform, which, by the way, was formed back in the 1980s under President Ronald Reagan. Grover Norquist, thank you very much for taking the call. Take it from the top and give us the latest on the front line there in Washington.
Well, Frank, another shoe has dropped. President Biden has said that if he's reelected with a Democrat House and Senate, he will let all of the Trump tax cuts, the per-child tax credit, the lower rates for all taxpayers, for everybody, he'll let those lapse. That's a $3 trillion tax increase. Then he made a list of tax increases that he also wants, over 2 to 3 trillion more taxes. Capital gains taxes highest in 100 years. Business taxes higher than China's. Capital gains taxes twice as high as China's. Energy taxes. And now there's another thing that hasn't been written down with the same specificity as the tax increases I just mentioned, but they're all talking from the same script. The president, Janet Yellen, Treasury Secretary, Podesta, the big political guy in and around the White House, they all say their energy tax is coming. They want to raise the cost of gasoline. They want to raise the cost of home heating oil, of air conditioning, of energy that you use in your home and at work. And they not only, and one of the ways they want to raise it is to link it to Europe. Europe is ahead of us in terms of going green in energy and ahead of us in terms of becoming uncompetitive in manufacturing because they have dramatically increased the cost of everything that you make in Germany by taxing normal energy and having energy made from wind or from solar, which is much more expensive. When they put that in, they then have to have subsidies for the German auto companies and other companies. So taxpayers pay for this not only in higher costs for cars, but in higher costs for the subsidies for the auto industry there. So Europe wants us to have the same policies of overly high cost energy, subsidize it if you have to, and they want to link the United States and Europe by having a border adjustable energy cost. So we couldn't sell them anything without adding on the cost of energy, and they're already paying higher costs for energy, so it doesn't affect Europe. It would just make America less competitive, but we would be equally crippled as the Europeans are in trying to compete internationally. And that, unfortunately, is top of the line of what they're thinking of doing.
Certainly not what President Reagan would have wanted to see, right? And this move to socialism and taking a playbook from Europe and trying to raise taxes and make it onerous on consumers, it's really quite appalling.
It is. Biden has also said, you know what? On our business taxes, we should have a floor so that we never cut our business taxes more than Europe. So we have the same taxes. He wants a 21% tax on everything, on every American business. Now, mind you, he wants a tax. Actually, he wants ours to go to 28, but he wants the floor to be at 21. He wants to take our taxes on businesses higher than communist China so that when we compete internationally against Chinese companies, we will start behind. We will start with a disadvantage, and we will have to compete by lowering our wages and benefits because we take more in taxes from our companies. I would like to compete with China and Europe by having lower taxes and fewer and less costly regulations. But since Biden wants to take the regulations up and the taxes up, he's going to force us. Every American family will compete against China and against Europe for lower wages in order to be competitive, in order to keep your job, in order to have your business keep going. You will have to take a pay cut.
And as you noted, last time a presidential candidate promised higher taxes, I believe it was in 1984 when Vice President Mondale ran against then President Reagan. And, of course, President Reagan won that year in a landslide. Nobody wanted higher taxes back then, and I can't imagine people wanting higher taxes now. I know you've taken a hard look at what former President Trump has proposed here if he were to win and what President Biden has on the table. Can you give us some of those comparisons here now?
Sure. It's the largest difference between a Republican and Democrat in American history. Democrats may have harbored secret plans to raise taxes, but they've never been this clear. And Trump has said, look, we're going to take the business taxes down. We're going to take the individual taxes down. We're going to have tax reductions for people, upper class, middle class, lower class, business class. Everybody's going to be seeing lower tax rates, in addition to maintaining the lower rates that he got enacted, that he signed into law in 2017 in his first year in office. Biden, on the other hand, has said we're going to dramatically increase by trillions the level of taxes on American businesses, on small businesses in particular. He wants to take that rate up to about 40% so that they'll pay even more than corporations as a business tax. He wants to take individual rates up. He wants to have another death tax, a second death tax. There's the one we have now. He wants to make it more punitive. And then he wants to add one on inflation. So he has made the cost of things go up by 18 points since his presidency, 18%. But usually now, if you have a farm or a business or something and you pass away, the value of what you owned when you left is transferred to your children on the cost of it when you die. He wants it to transfer at the cost of it when you acquired it, so that all the inflation during your lifetime will be taxed at a high rate. That is an amazing death tax, and he is weaponizing his inflation to make sure that increases your taxes.
Businesses are buzzing this afternoon. Have you seen the latest news? There's a report that the government is going after Live Nation, looking possibly to break up the company. The stock is moving lower on reports that the Justice Department is poised to sue the company over antitrust violations and will seek its breakup, according to Bloomberg. As you know, the Biden administration has made antitrust enforcement a key component of its economic policies, starting cases against Google, parent company Alphabet, Amazon, as well as Apple. Any reaction there that you're picking up on this latest move here?
Yeah, this is particularly disappointing. Antitrust, which started many, many years ago, was designed to say if consumers are suffering because prices are kept high, because companies are colluding, that's a violation of the antitrust law, and the government can go in and see what can be done to change that. Is there did somebody get a monopoly profit? What what the Biden people want to say is, you don't have to show any damage to consumers. You just have to say you don't like what they look like. Okay, it seems to me that what the law has been, and the way judges have interpreted this for decades now, is you have to show first consumers are harmed by something that's happening. Then second, you can go in and say, is there a violation of the law? Did the company do something wrong? In which case you could do something about it and break it up or change some of the rules for them. But Biden's people, to go after antitrust, they want to be able to say, you haven't done we don't think your hiring practices hire people by race, and we think you should hire people by race. And because you don't have racial quotas, we want to use antitrust law. Where are they interpreting that from? To break you up, to smash you around, and not let you merge. This administration wants to force people to unionize their workforce before they'll allow a merger to take place as a payoff to organized labor, which is a major funder of the Biden campaign and the Democratic Party. This is largely a fundraising operation. They're threatening businesses around the country. Give them enough money, they'll go away.
On there live with taxpayer advocate Grover Norquist, and ultimately, will that lead to higher prices? Will this add to inflation for consumers, given everything you've just described?
Oh, yes, because the reason why companies merge is to be more competitive. The number one reason is when the fifth and sixth size company in telecommunications or somewhere else wants to merge so they can compete competently with the top three or four. That increases competition. That keeps prices down. Instead, what happens is they then go bankrupt if they can't merge. And they've done this, unfortunately, time and time again with this administration. They don't understand. It's not enough that they don't understand economics. They don't care. They just don't care. They like to be able to threaten businesses and tell them how to organize themselves.
Taxpayer advocate Grover Norquist, who advocates for all taxpayers, Democrats and Republicans, president of Americans for Tax Reform, which was formed back in the 1980s under President Reagan. Thank you very much, Grover, for that important update this afternoon.
You got it. Thank you.
Right out to the freeways now on 790 KBC. Mottek of Money continues here, 790 KBC. Good afternoon. AI back in the spotlight. NVIDIA blowing past analysts' expectations with its earnings report today. The AI chip giant had actually closed down about $4 today to $9.49 and change, has popped big time in after-hours trading above $1,000 for the first time, up around $58 to $1,007 and change, up 6%. NVIDIA shares had approached 1,000, but never actually crossed that threshold until we see these after-hours numbers this afternoon. So NVIDIA certainly will be in the spotlight first thing tomorrow morning. And artificial intelligence, of course, the big topic of conversations at the B. Riley Conference in Beverly Hills right now, as well as all business conferences, would not be complete with some sort of an AI component. Big topic of conversation on Wall Street, but Main Street also, especially here in Hollywood. It was a big topic, of course, during the writers and actors strike last year. And actress Scarlett Johansson now says she was shocked and angered over OpenAI's use of a voice that was very similar to hers, and her lawyers got involved, arguing AI voices should not deliberately mimic a celebrity's distinctive voice. Let's bring up this issue now with J.D. Harriman, partner at the Foundation Law Group. J.D., thank you very much for taking the call, and give us your reaction to this latest news here.
Thank you, Frank. Great to be on. This was surprising the way it went down to me, because her lawyers and Scarlett herself were relatively calm. There was not a lot of rancor in her statements, written or otherwise, even though she was shocked, as she said. And her Sam Altman, he used multiple voice actors, one or more, I think, to create the voice. The problem, I don't think, here is the taking of her voice. There are plenty of laws that would protect celebrities for their name, image, and likeness and their voice. Celebrity sound-alikes have been litigated before when they weren't clearly identified or went beyond parody and seemed to support promotion of a product. But here, I think the big story is, and it should be a red alarm, they may not need Scarlett Johansson. If they can make a nice voice that makes people remind them of Scarlett Johansson, why do they need to pay her? If I was an agent or a manager right now, I would be making an AI deal as soon as I could before the window closes on these opportunities.
Isn't this something that was an issue with SAG-AFTRA and the Writers Guild last year, this AI component and name, image, and likeness protections?
It absolutely was, but it doesn't prevent it from happening. It wouldn't prevent an actor from making a deal. I don't believe they have standard rates for it built into the labor agreement. So I think it wasn't really clarified. There are rules for the writers on the use of AI and scripting, but there are less limitations on AI actors, and even if the studios are bound, independent creators would not be bound by those rules.
So what is your guidance then for voice actors, people who use their voice for work, whether it's acting or even newscasters for that matter, where some of these AI programs might try to mimic somebody? It might not be exact, but close enough, right? What kind of advice do you have for people in the business?
Well, Frank, someone like you who's quick on the draw with that magical voice, I don't think you have to worry too much, because I don't think an AI can have your wit or insight. They may be able to sound like you. But
thank you.
My pleasure. But I think that if I was an actor, it's not the live things like what you do that are going to be as impacted. I don't think it's the scripted work that's going to be impacted, or something that doesn't have to be as dramatic, like an AI voice helper like Scarlett Johansson was dealing with. I would, again, try to seek out and protect my actual voice. When my voice is cloned, yes, there are laws that protect you for that, and you have to be vigilant in looking for that and finding it. Maybe they'll come up with a software tool to do a voice analysis and say, hey, this looks like AI created your voice from nothing. But you just have to keep your eye on that.
Very interesting, and thank you for those generous comments. And yeah, so what preemptive strike? And thank you for that legal guidance. What type of what kind of how would that agreement look like if you were to try to protect yourself preemptively?
Well, it would be the same as, or similar to, a name, image, and likeness deal that college football players are signing these days. So there are precedents and templates that would handle this sort of thing. I think the advantage to an actor or an actress or some sort of personality is it could be effectively eternal. So right now, copyrights end 75 years plus the life of the author. A lot of dead celebrities are still making a boatload of money, but this would make it even easier for a celebrity to sort of be eternal and have their heirs collect money or royalties from things they continue to do even after they may be unable to work or pass on.
According to the Variety story about this situation with Scarlett Johansson, looks like one of the new voices in the GPT-40 chatbot was pulled down. According to Variety, Johansson, in a statement provided to Variety, said her lawyers contacted OpenAI to have the voice of Sky, one of the new voices, pulled down. Whether or not that's happened, I'm not sure. But what about the reaction that's been reported to what Scarlett Johansson, the action her attorneys have taken?
Right. So I did see that it seems like Mr. Sam Altman voluntarily took the voice down out of respect. I forget the exact terminology he used. And that may have been good advice from his lawyers to do that until they can get it straightened out. I know Scarlett Johansson's lawyers have asked for information on how that voice was generated, which I imagine they do have. And it'll be interesting to see if it's a sort of a clean room generation of a voice that maybe reminds people of Scarlett Johansson without being Scarlett Johansson. But that was probably a wise move to take it down, at least temporarily, until this can get all straightened out.
Any other big issues that your firm is handling regarding intellectual property rights and anything else that's front burner nowadays that we should be aware of?
Well, this whole thing reminds me, I was Steve Jobs' patent attorney when he was at Apple, Next, and Pixar. And this reminds me a little bit of Pixar that moved from a hardware company to an entertainment company. And I sort of see that happening with Mr. Altman and AI starting to get really moving into the entertainment space and not just a tech tool. So with the latest versions of their video generation tools, which are quite remarkable, and now the voice cloning and the voice tools, it seems like that kind of move.
Well, if this ever happens to me, you're going to be my first call, J.D. Harriman. I really appreciate it, and thank you very much for sharing your expertise with us here today. And we'll keep an open line to you on this important issue, which I'm sure we'll be hearing much more about. That is attorney J.D. Harriman, partner at the Foundation Law Group. Thank you very much for taking the call here this afternoon.
Thank you, Frank.
Stocks pulling back today. The Dow down 202 points, still hovering near its all-time high at 39,671. The S&P 500 pulling back 14 points from its record high at 5307. And the Nasdaq down 31 points from its record high at 16,801. The yield in the 10-year note now at 4.43%. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back tomorrow at 4 with more Mottek on Money, 790 KBC.
John brings his skewed sense of humor. Jeff brings tips to cut strokes off your next round. Together, it's those weekend golf guys.
They'll pay a lot of money to PXG and Titleist and Callaway and on and on and on, right? How many yards do you think you're going to pick up with that extra driver? I think I can get an extra 5 to 10. What if I give you 15 to 20? You pay me more.
Jeff Smith teaches on a sliding scale.
Those Weekend Golf Guys, the podcast, part of the Believe Network. Just search BLEAV on YouTube or wherever you listen.